Well, good Friday morning. Thank you so much for joining us here today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, let's take a look at the markets from the perspective of Brian Hoops. He is the president of Midwest Market Solutions. Now, he is in Springfield, Missouri, and the frontal boundary of the big storm system that Tim was talking about already went through your area there. It's causing a wide array of weather fallout after that system goes through. I mean, we had all that heavy snow in the West Coast area, California there, Colorado, Texas had tornadoes, and that's moving on up into the Mid-South and the Midwest here. So I don't think moisture is going to be a problem this spring, the way it looks, as we build up that subsoil moisture, at least in the Midwest. Now, I can't say that for the southern plains, but all in all, it looks like we may be in pretty good shape. But I was reading overnight where Argentina may have another dry period for about 2 weeks. Is that what you're hearing too?
Yeah, good morning, Marlon. And that's kind of what the trade is reacting to, is that forecast for dry weather for Argentina. The Buenos Aires Grain Exchange came out last night and lowered corn ratings to I think 6% good to excellent, soybeans down to 2% good to excellent. So these crops are really in retreat. And we'll see that show up in the USDA supply and demand report coming out on Wednesday. Expectations are for lowering the soybean crop, lowering the corn crop in Argentina, and maybe even in Brazil. So, yeah, we're going to see that development, but there's some people, private analysts in Argentina, talking sub 30 million metric tons of soybeans in Argentina. You know, last year they were over 46 million tons, and USDA's right now at 41, likely to come down into the mid 30s. So, yeah, it's going to be a supportive feature, especially for soybean meal. It will be supportive for soybeans and to a lesser extent corn. And just a comment on what you preferenced early in the conversation about the rain and cool temperatures here in the Midwest. You know, we're getting some nice rain here where we're at overnight, almost 2 inches, but then it's expected to be back into the 30s and 40s, which is abnormally cold for this time of year next week. And that could be very much the case for a lot of the Midwest. They're going to get moisture in the form of snow and some rain. But the month of March, we're not going to heat up that ground temperatures that much, and that's not going to allow us for an early planting period for most of the Midwest in April. We're going to have that snow melt, moisture, get out of the soil and let that soil warm up a little bit by mid-April before that optimum planting time frame starts to kick in.
Brian, let's go ahead and take a look at how we wrapped up in the Globex trade. And by the way, I again did not see any overnight flash sales reported. So let's go to the corn board here and look at our quotes provided by bar chart. We did finish up on a firmer note here this morning. We had the May corn 3 1/4 higher at 6.37, and December was up a half cent at 5.71. So kind of quietly higher, but it was led by the nearby contracts. Now, same thing in soybeans. The nearbys had more strength than what the deferreds did. And the May contract was up 6 1/4 at 15.15 1/2. You had July soybeans up 4.5 cents this morning. And in November new crop soybeans, we were up just 1 3/4, and we finished the Globex at 13.69 1/4. As far as the wheat goes, we had Chicago on the May contract up 1 3/4. It was at 7.14 1/2, and you had the July contract 2 cents higher. Kansas City wheat, the May contract was 5 1/4 higher at 8.31 1/4. July 4 3/4 higher. And in spring wheat, you had the May 2 1/2 higher at 8.78 3/4. And July was up 2 cents. By the way, Brian, I was reading overnight that the Indian wheat crop is suffering from drought there now. That could be a factor too, right?
It certainly could be. You know, we don't really know what Ukraine is going to produce this year. Russia's expected to have a large crop, although it's been downsized a little bit here recently. So, yeah, if we have additional crop struggles in parts of the world, that could be a benefit for the U.S. Prices, as we may start to see some of that export business flow to the U.S. Overnight, Russia reportedly said that they are not interested in extending the deal unless they have a removal of the blockade of all their items. So, the negotiations, I think, are just kind of getting underway. That agreement expires in 2 weeks, and the uncertainty surrounding it will give us some higher prices in the wheat market. Markets don't like that uncertainty, and I think that's going to put some premium into the wheat futures.
And apparently Iran bought 60,000 tons of wheat from Russia. Color me shocked. We'll take a break right here, and Brian will come back and talk a little livestock here on a Friday right after this. One thing I wanted to point out that was kind of intriguing here this morning in the outside markets, look at West Texas Intermediate crude oil. Well, on the big board, April futures down $1.56 this morning at $76.60 per barrel. That could play a role in things like soy oil and corn. And the U.S. dollar index is weaker again. March down 330 points at 104.665. It had been up there around 105 yesterday. Now, on the live cattle close yesterday, we had the April down $1.02 at 164.10. So we closed lower across the board, led by the nearbys. Feeders yesterday were narrowly mixed. You had April unchanged at 193.85. May was down 17. The deferreds beyond that, just a few ticks higher. And in lean hogs, you had the nearby April contract $1.10 lower yesterday at 83.85 as it continues to flounder. And here again, the nearbys had the most weakness. Now let's go back to Brian Hoops and talk about this. Brian, I know you're pretty well connected with the cash cattle market out there, and I heard we had a little bit of trade out in the plains that may have been a little bit higher again this week, but it seemed like it was on a dressed basis. What did you end up hearing there?
Yeah, we did hear some Kansas cattle being traded at 166. That's $2 better than the previous week. So that should be friendly for the market. It really sets a tone for the rest of the southern trade to develop later today at that same 166 type level. Live basis, there was a little bit more volume, $1 to $2 higher than a week ago. Dress basis, again, very good volume in Nebraska. That's $2 to $4 better than a week ago. So the cash trade, nothing wrong with it this week. The futures market does act a little tired, but I wouldn't be surprised to see maybe a lower opening and then some strength coming into this market in the form of hedge lifting after some cash trade starts to develop. That could give us some higher prices. And it seems like on Mondays, that's when we want to rally the cattle market. And, you know, we're anticipating, or the futures market's anticipating that strength in the cash market. So we kind of had dialed it in already, but we'll be looking ahead to next week's cash trade, and that could be stronger once again. So I wouldn't be surprised, kind of a firm weekend and firm trade on Monday morning in the cattle market.
All right, Brian, thank you very much for joining us here on a Friday morning. You have a great weekend. Brian Hoops,
You too.
Midwest Market Solutions, joining us from Springfield, Missouri. So